Awesome. All right, let's get started. Hey, everyone. Glad to see everyone's kind of coming back from lunch. My name is Matthew Ney. I work at Messari, write the State of Solana report, and a couple others, Helium and the Solana ecosystem. And so I think we should just start. Quick intros. I know everyone can see their names, but let's introduce each other.
I'll start. My name is Carl. I'm a general partner at Six Man Ventures. We're an early stage venture fund that leads pre-seed through Series A rounds with checks usually $500K to $5 million. In general, we focus at the application layer, and that's been our bread and butter for the past 4 years. Many of those investments being in the Solana ecosystem, probably totaling over 30 at this point.
Beautiful. Hi, everyone. My name's Brandon Potts. I'm a partner with Framework Ventures. We're an early stage crypto fund as well, focusing predominantly in seed and Series A rounds. We typically like to be leads or co-leads, and we've done a lot of work over the years in all sorts of categories, also mostly in the application layer, but thematically, DeFi, gaming, infrastructure, DePIN, AI. So at this point, we're going into our fourth fund. I joke that we're pretty much a generalist.
Hi, everyone. I'm Peter from 1KX. We're a lead at pre-seed to Series A. We invest across the whole stack from applications to middleware to infrastructure. But I'm the founder that leads application investments, and I'd say we're one of the most active at the application layer today.
Great, yeah. I'm glad we're going to consumer crypto here in a second, so a lot of application talk. Excited about that. But let's take a step back. We're in your guys' office, November, December 2023. What did you expect out of 2024? And then we'll also take a second to look back as what were the winners of 2024? What overperformed and what sectors underperformed? Peter, if you want to take that one first.
I don't think anyone would have known, right? You can sort of look at what fundamentals have improved, and there was definitely some surprises, right? I think there was some signs you were going to see meme coins, enter the zeitgeist. Personally, for me, I saw a lot of fundamental adoption and then sort of progress in games, especially play-to-earn games that effectively survive the cycle. But I think DeFi was an obvious one, but there was a lot of surprises in general.
Oh, yeah. I mean, I think it's hard to sort of emphasize this enough, but going back to late 2023, in the U.S., it was obviously a big question as to what would be the outcome of the election. And just to step back for a moment, for those who maybe weren't familiar, frankly, we were operating in a hostile environment where, the Biden administration, let's just say, was not being helpful to our industry, to put it succinctly. And so, a large part of the course of 2024 was frankly watching sort of the sea change that was underway as it relates to Donald Trump and this new administration coming in. And I don't probably have to highlight too much there, but let's just say it's like night and day. It was a 180-degree turn. And I think that as a result of that, we saw a whole kind of resurgence in DeFi and all sort of the talk around institutions, not just doing proof of concept stuff or dipping their toes in anymore, but frankly being able to do all sorts of things. And I think one of the main things that started right away was folks generally holding crypto assets in their treasury reserves almost immediately. And, Solana's been a large beneficiary of that, at least at the onset of this year, with a number of folks looking to run kind of, the MicroStrategy playbook, if you will, for Solana. But yeah, I think that was, really the biggest change as it relates to going back to late 2023 and then watching the evolution of the space over the entirety of last year.
Yeah, maybe just a quick show of hands. It's bright. Hopefully I can see. How many people held Solana at $20? Okay, so it's probably 50% of the room. So as I was thinking about this, Solana in September of 23 was trading at $20. And so from September to December, we went from $20 to $100. So we had this massive 5x increase. In January, early 2024, we had the Bitcoin ETF. So there was this, Brent's exactly right. There was this sort of cloud of regulatory constraint, but the trenches and the community were emerging. And so it was this weird sense of optimism with also this realistic malaise over the top of it. But, a lot of times VCs, we like to sound smart, but as a community, most of venture was wrong about what we thought would be big in 2024 and 2025 versus what actually was. And at that time, Bitcoin L2s was probably the hottest segment possible to invest in. We didn't do any for strategic reasons, but these deals were, just brand new founders raising at $100 million. And there was, 10 to 20 of these that got funded. And here we are April, May almost, 2025, and none of them are live yet. And so it just goes to show like how much attention like people like focus and then how quickly it shifts and the narrative changes. But like people thought Bitcoin L2s are going to be huge, and ordinals are going to be huge. People thought restaking was like the sort of the ultimate use case of crypto, and that everything led to this point. And to this day, I think restaking has been a pretty huge disappointment. So I think all these big infrastructure projects were the target of VCs, but actually the applications like the pumps and the hyper liquids are the ones that actually produced a ton of revenue and outcomes in 2024 and into 2025. So that's where we were. And I think, now we just have an incredible amount of optimism and growth at the application layer we didn't have back in 2020, late 2023, early 2024.
Generally for venture, it's pretty safe to bet against the crowd. Like venture is, is a strategy that takes anywhere from, if you're lucky, early 3 to 4 years, but upwards to 7 to 8 years to really realize returns. And, you're not investing in, I would say, a shitcoin that goes up and down. You're invested, I think, at teams in the early stage. And I think that as a result, like, the greatest, I think, you can generally, I think, like safely bet against a crowd in most of these cases.
Yeah, and just to add on to that, especially the crypto Twitter crowd, whose attention span is on the border of, days, if not hours, maybe months at best. And, frankly, as a venture investor, looking at 5 to 10 year time horizons, that's just really not in our wheelhouse. So these, narratives and excitement, it comes in and goes. But the thing I would highlight from an optimistic standpoint is that's what crypto's superpower is generally just like aggregating attention, capital, resources around any sort of given story or narrative or part of the stack or application, for example, and basically getting it off the ground from zero, getting some momentum going. And then from there, it's anyone's guess as to kind of what application or front end or implementation it is that folks really wind up using. And that's generally what we're all looking at is like, okay, cool. I like the idea. I get sort of the concept, but what does it mean in terms of brass tacks, implementation, adoption, and then most importantly for us is like, what's the business model behind it?
Yeah, why is it? What is going? How do you justify its existence?
Yeah,
5 years from now.
Yeah, let's say we're not longing Fartcoin. We'll leave that to retail and have fun.
And the liquid funds. The liquid funds love the meme coins. They absolutely love it.
No, that's awesome. I really appreciate that looking back. And what we did see in 2024, you mentioned it with Pump Fund and Hyperliquid really taking off. And in every one of your guys' introductions, you really focused on the applications. And Carl, you had your talk yesterday on consumer crypto. And was Pump Fund and Hyperliquid, these applications breaking out in 2024? Is that why we're hearing all about applications? Was that the beginning of like the investing in the consumer crypto? Were you guys looking at this before? And also, what is consumer crypto? What does that look like? Is that Pump Fund? Is that chains like Abstract? Or is it like Friendtech, Zora, some of those like social-fi platforms? And I know that's a loaded question, but
what is consumer crypto? My definition of it is simply, producing net new experiences or services that would never be possible with the traditional web. And I think there's a lot of talk about applications, but very few applications building in crypto. I really executing on products that are net new. I think a lot of it is just, skeuomorphic, copy and paste businesses from Web 2 that could, easily use Stripe itself, right? So I think, consumer crypto, the purest idea of it is like, it revolves around like, what can we do that would otherwise never be possible without a blockchain?
Yeah, I kind of maintain a very broad definition of consumer. Frankly, it's anything that, a consumer or an end user would use. And I think, I hear many people chatting about like infrastructure versus applications. And I would also add that those are kind of blurred lines, especially as the crypto stack matures. And inevitably, in order to enable net new applications, you're generally going to need a new foundation of infrastructure. And so, holistically, we look at the entire stack, make no mistake about that. But, consumer, I think, is just wide open at this point. And it's frankly a function of talent and founders coming in with a distinct read on what use case they want to enable. And maybe they have a beachhead in a particular market, a particular vertical, or a particular, asset, for example. I mean, really, it's wide open. And so I think, one of the bottlenecks in crypto is just frankly new folks coming in and wanting to take shots on goal and building businesses around these things that again are sustainable and long term and aren't just like, let's launch a token on top of kind of hype and narrative, if you will.
Yeah. So applications have been around for a while. So I think the application investment area was not new in 2023. I do think many prior funds subscribed to the FAT protocol thesis, which basically was, unlike in Web 2, where most of the value is captured at the application layer, the FAT protocol thesis that was widely popular and successful for many years was like actually the protocols themselves make all the money, not the apps. And that's through MEV and other types of transactions. And we've always been investing in apps. We were in the first round of Magic Eden back in 2021, StepIn, I think also 2021, 2022, something like that. So we've been very active at the application layer, and there's been opportunities, but nonetheless, I think most investors were not very active at the application layer. I think the growth of, to your point, Pump and Hyperliquid producing hundreds of millions of dollars of revenue a year really validated that category as actually apps can generate substantial revenues, and it doesn't all just get eaten and consumed by the underlying protocol. So now I think every single venture investor is figuring out, how do I do consumer crypto? What does that look like? And we've all been doing it for a while, but a lot of funds haven't. They've kind of focused on infrastructure. And I think a lot of people are figuring out consumer is really hard. It's really hard. You have a very low chance of succeeding just statistically. And so as part of that, it just requires the right type of mindset and the ability to take many shots on goal from an investor's point of view. I think in terms of consumer crypto, super broad view. Like if I had to summarize it in one way, it's blockchains are unique in that they enable what I call the internet of value. And that's really all about composability of assets. So on this single ledger, you can have, if you think about a triangle, content, money, and identity all on one ledger, which means you can get financial attribution for any sort of content, for any sort of individual, all on the same ledger taking place, versus in any sort of Web 2 product, money is on a separate ledger than content, which is on a separate ledger usually than identity. So crypto bring these together to create hyper financialization. And I think every sort of successful crypto consumer product has a high degree of monetization of content and financialization involved.
And so you guys were all saying about the focusing on the applications, and we're going to take the other side. Now this was like a little hot debate on crypto Twitter about a month ago. Is the infrastructure trade dead? Is the infrastructure investing, like, is that over? Is it all about applications? I know that's a loaded question, and I know you don't have to take 0 or 1, and there's a lot of stuff in between, but will we see these all L1s, major L2s raise these mega rounds that we have seen over the last couple of years? Is that over, or do you think there's still going to be some of that in the future, as you said, with new applications might need some new infrastructure?
Yeah, look, I maintain the view that we're going to continue to need more and more infrastructure, but that's not to say that you're going to just raise a new L1 on a white paper and raise hundreds of millions of dollars. I think, for one, the market structure has changed. So the days of simply having that white paper and promising the value outcome of a Solana or an Ethereum or a SWI, for example, in 2 to 3 years, getting centralized exchange listings, that game has been played, and Godspeed to anyone looking to take that on nowadays, I would say. But yeah, I still maintain the view that, look, like, it kind of depends on how you in particular define infrastructure. For example, we're early lead investors in Jito, right, who built on Solana. Is that an application? Is that infrastructure? You could argue a little bit of both. Perhaps it's a middleware. But nonetheless, like, that unlocked an entire new design space for folks to come in and build on top of Solana while scaling the L1 performance itself. And so, look, I think that it not to sound like a broken horse here, or a broken record rather, it frankly depends on what you're defining this as. And I like to keep the definitions wide open, because the nomenclature in crypto changes almost every day. We're coming up with new acronyms, jargon, you name it, and it's fun. Like, I enjoy it, make no mistake about that. But yeah, look, I think it's just frankly looking for people, enabling use cases and just making, large step functions upwards in terms of what new things people can actually come in and build. And in addition to that, as you look at these new L1s or L2s or just infrastructure coming to market, a lot of what they're doing in their USP or their value prop is, look, we're trying to abstract away more and more of the bare metal the low-level implementation details and make it easier for app devs to frankly just focus on, to Carl's point, what's already a really tough task at hand, which is building applications for end users and getting into kind of the battlefield of acquiring customers, monetizing them, retention, rolling out new features and products. That's tough enough. And so, yeah, I think the infrastructure stuff will continue, but perhaps not at the same pace as cycles pass.
So this is something I changed my mind on. So for some context, I spent my entire time in crypto since 2017 focused on applications. I built the original application layer, built a community in Ethereum. I wrote about every application released on every blockchain for about a year. I've been pushing the story, and that's why I became an investor. It was to write checks directly to fund apps because no one has cared about apps in Ethereum. So, I've always had the same view of like, we don't need another chain. And I think to be specific, let's talk about like chains, L1s, L2s, whatever, right? The market is block space. And I think, in reality, this market has been poorly served. It's mostly been served by foundations and networks that aren't used, that don't have product market fit, that are mostly propped up tokens, that are basically leveraging retail for exit liquidity. So I think if you look at supply and demand, I think, supply is poor. It's been, but if you look at demand, we've barely uncovered half a percentage of the total white space, if you will, right, of applications that will exist, that will find mass adoption, that will, generate potentially, billions at scale, as we've already seen by a few examples to date so far. And when you look at it from that perspective, you have to think about like the directional view of like, okay, will the demand for block space increase dramatically, or will it be incremental? Will this demand scale incrementally? I think it's ridiculous to assume that we've saturated the demand for block space so far. And I think if you look at the supply side, it's been poorly met. It's rife with incompetency, crime, and I think products that are honestly awful, right? And so I actually think that this is sort of I guess one perspective I changed my mind on recently was simply, actually we do need more networks that solve for this demand for block space, and then different types of block space too that enables, let's say, net new areas of applications, right? But I think that's very much the reason Solana's done so well, is simply because it served the demand for block space so well, so competently, when everyone else was mostly, I think, fiddling with technical differentiation that no one needed, and white papers that no one cared about, right? So
maybe I'll try to thread this needle. So I think I think we need differentiated block space. And what I mean is the generalizable block space of, hey, it's a general purpose, global computer. I think we have plenty of that. Like if you look at global block space usage, we're probably at like less than 1% of all block space is used. So saying we're going to produce more generalized L1s and L2s, to me, is not a good investment and not even a requirement for our industry, because we haven't proven that we even need the existing block space that's already being used. To your point, differentiated block space that adds particular value for particular applications. For example, Peak building for like a blockchain for DePIN. We're both investors in Plasma, which is building block space for stablecoin payments. And so I think if you have a blockchain for a particular use case, that it can better serve than generalizable blockchain by orders of magnitude. It can't just be like 50% better. Like it needs to be radically better than existing general purpose block space. Then I do think there's an opportunity. But also, there's infrastructure is not just block space. And we would all agree, there's all sorts of supporting infrastructure that goes with it, from dev tools to oracles, all the way down the stack. And so I do think there's more opportunities there to keep investing against it. But yeah, the general, hey, white paper raised $200 million to build a generalized L1, I think that trade is over.
Yeah.
I also think the block space market is going to be served in different ways, not necessarily through monolithic, attempts to, raid the public markets for exit liquidity, right? I think I expect a lot of verticalization. All this tech is open source. You can really take the best infrastructure, and any application of critical mass that owns the end user relationship can just verticalize down the stack and take the users away and monetize at the block space, at the block space layer, right? Assuming that commands the same market comps that it does in 5 years, there's just this massive economic, incentive for applications to do so, right? I think there are nuances, obviously, of which apps are able and are in a position to execute on that. But I expect it to be served in many other ways too.
Yeah, I agree. I mean, application-specific block space is 100% what I refer to in kind of new infrastructure coming to market. And that's not, I mean, look, like, I think it all comes down, at least from a VC's purview, as to like, what is the rate of change from some of the general infrastructure relative to some of the application-specific infrastructure. And it's anyone's ball game, but really when you underwrite it, you have to look at how quickly are these folks shipping. And we've seen, across the L1 stack, stagnation and, a number of chains. Others may be shipping very quickly, but perhaps they go off in the wrong direction for a year. They make the wrong bet. And so all that to say, it's tough to bet against the need for more infrastructure because you have folks generally building, I would say, similar things, but in a different sequence and targeting different markets at different times. And so it's wide open. It really is.
And going right off of that, I know we have a lot of builders here and a lot of builders in the crowd. And so I guess the question I think everyone here is for is like, where are we in the cycle? But at first, before we pretend to be macro investors, let's focus on from the VC side of things. What are you guys seeing in pitch decks? How are rounds changing? Have they changed over the last couple of years? And what are you guys seeing on the ground floor in your day-to-day?
Who wants to start? I guess I'll jump in. So generally, I think venture has gotten a little bit slower over the past 4 months. I think part of that is there was a big rush of founders looking for capital, let's say, as Bitcoin was kind of resurging back after the Trump bump. And so with that, I think now people are really looking for as much capital. So I noticed our deal flow has slowed down. I also think many investors now have just another cycle under their belt. So a lot of us are much more selective versus, I might be more optimistic 3 years ago that, if they do this and this and this, and then the sun happens to set over here, like they might be able to achieve success. Like I think it's worth it. Now I think everyone's much wiser after another cycle. And so we're quite selective at this point in what we invest in, but our thesis has changed. When we do find a team that we're high conviction, we go much deeper with much bigger checks. So across the landscape, look, valuations are still pretty reasonable. Like we just led a consumer deal and I think it was 12.5 or 15 million post for a team that is in beta and going live soon. So I think if you go to a venture capital firm and demanding a high premium, unless you bring some sort of differentiated skill set or network that's like truly outstanding, I think the rates are kind of back to standard to where they're, as they supposed to be, and quite healthy. The one exception to that is I do think there's like mega rounds getting done for these very, very high value builders or builders working in conjunction with specific enterprises to bring together a blockchain solution. Those are, $100+ million rounds that are getting done. But generally, yeah, it's like pretty healthy and many investors are still writing checks.
Yeah, I think the main thing that I would highlight is everyone's a bit more pragmatic and practical now. And as I mentioned earlier, the market structure for crypto has changed. So I think in cycles previous or in years past, people wanted to get that headline PR announcement of we have, X round size at Y valuation. And your hope was to bring in the community, get a bunch of followers, a bunch of users, and then go to Binance and say, hey, look, Binance, we have 250,000 followers. List our token. Okay, we're liquid. Cool, mission accomplished. And look, like that game, it's up. It's been up. And so now folks coming to the table, at least, the folks that we speak with, are taking a longer time view. They're looking to get into partnerships with quality investors who are on the cap table for a long time and aren't just selling that first unlock or that first cliff. They're looking to build something sustainable and something that frankly wins undeniably a category. And I think as a result of that, the founders are coming to the table with a much more compelling pitch, and they're not coming with just the idea and the concept, but they've done user interviews, or maybe they have a pipeline of initial customers, or maybe they even have folks already live in some form of a test net or on an MVP. And so across the board, I would say the VC side is more sophisticated. The LPs funding us, the VCs are more sophisticated. And the founders, as a result, need to be more sophisticated and, frankly, more in tune with this market structure. And as a result of that, valuations, I don't know, they fluctuate all over the place. But I would just stress I would not index to the value being the highest valuation you can get, because more often than not, the folks who are willing to underwrite that are a bit more short-term in their thinking. I would index more so to the folks that have a good reputation and are actually going to roll up their sleeves and help you in any way that they can. And of course, we pride ourselves on doing that and hope to do that with everyone we work with.
Can I just build on one point you said? I thought it was really good. It was around now teams generally have more ready when they raise. Like last cycle, it was I have a pitch deck and I want $3 million to go build this idea. I think AI has radically changed the game where now it's never been easier to prototype an idea and get like, let's say 100 users on a testnet just building. And so now if somebody approaches us with an idea and nothing else, we're like, well, what have you done? Like you actually haven't proven your ability to de-risk this business whatsoever, except for put 10 slides together. And so I think that's the expectation we see. And AI just really makes it easier for builders to prototype. And I think it makes for better round structures in the long term than where we were last cycle.
Easy money is over.
Yeah.
Nice, Billy Short. I like it. So we're only 4.5 minutes left. And I wish we could go longer. This has been a great panel so far. But what sectors are you really excited that we're looking at 2025, 2026? What sectors are you think gonna like break the chasm, really show out, and what do you think are gonna be the big winners of this year and going forward?
Yeah, we're doing a lot of work in and around energy. It's frankly a market that hasn't really been tackled from crypto and I think crypto's existence. But if you go back to kind of the origin of Bitcoin, they built up arguably the largest, compute provider in the world that obviously consumes a lot of energy. And as a result of that, with new categories like DePIN coming in, we have all sorts of new ideas and founders just working generally in that space. We've done a few investments like Glow and Daylight. Feel free to check those out and happy to chat afterwards. But that's certainly an area we're digging in deep. AI, of course, everyone's looking at it. But again, you can kind of vibe code on Cursor over the weekend and have something that looks, sexy and snappy and is fun. And maybe 1,000 people have used it. But very quickly, the conversation becomes, what's the business model? What makes this defensible? Where are you monetizing? And frankly, what's to prevent someone else from vibe coding something else up the following weekend that's 10x better, maybe using a model that was just distilled from the big boys in big tech. I think that's certainly something to be cognizant of. But look, I think as I've alluded to previously, like we're looking across the entire stack, and there are all sorts of folks that are coming in with not just incremental changes, but step functions up. And I think that is like very optimistic. There's obviously a lag time between when we invest and when these products reach to, get to market. But based on what we're underwriting and the things that we're investing in, I'm very optimistic for next year. I really am.
So I think most funds look at everything, and we definitely do at 1KX. I maybe what might be better, more helpful is sort of highlight what are we looking at that everyone else thinks is done, is over, that no one else is looking at. And I'd say actually play to earn games. This is the only category of applications in Web3 on the app layer where teams are actively thinking about how do I grow return on token spend? How do I get to profitability? How do I grow my revenue and 10x this? And how do I 10x my user growth? How do I build a better funnel? I think this is an area that we're still paying incredible attention to. We pay a lot of attention to any consumer apps still building with NFTs. I think everyone was right in 21, just wrong on the time frame, and the right form factor is yet to emerge. We generally like looking at things that I think everyone else has given up on, and that's generally where we've made our best bets historically.
Yeah, I guess starting with what I'm not optimistic for, I think DePIN, I expect just like steady growth, but I don't expect any radical breakouts. There's a number of reasons for that. One, it's really hard to get demand. Many builders are struggling actually getting demand to their networks. Two, the token models are broken. A lot of these networks, 50% or more of the revenue doesn't even go to the token. It goes to an equity team. And so I think with that, DePIN's fairly broken right now. I don't expect it to radically change. I love DePIN, so I hope I'm wrong, but that's kind of where my default is. I also think AI crypto is not going to be a major thing this year. I think we might have breakout tokens that run, but actually in terms of crypto primitives being used to solve core AI challenges, I think we're a little bit early for that still. So those are areas I'm not optimistic for. Sorry, I don't think we're going to do well. Areas I'm optimistic. I think gaming as well. We did step in. We know that company probably better than anyone. That thesis is not dead. It is going to come back, and it's going to come back with a vengeance. We have one or two teams building on that now, and I expect to see more over time. Also very optimistic for DeFi. We just keep seeing incredible new DeFi projects coming out that are, I think, really pushing forward the bounds. And that's very different. Like a year ago, it was basically, I'm going to take this AMM and launch it on Aptos. I'm going to take this AMM and launch it on Sui. It's pretty boring. I think now the bar has gone up a lot, so quite optimistic on gaming and DeFi. And things that are definitely working, stablecoin payments for sure. Like stablecoins are by far one of the biggest trends this year. Many companies are getting funded and getting real revenues around stablecoin adoption. And consumer crypto, like I'll say social experiences. I think the likes of Pump and especially is just going to bring in a new generation of builders that hopefully some of those continue to succeed. So that's kind of where I'm at across the spectrum.
I was right at the shot clock there, and so I want to appreciate you guys being on this panel. This has been really exciting, and I appreciate everyone listening and being here. This has been awesome.